Welcome everyone to the Tradimo live webinar. Thank you for coming. And before we start, I would like to check if everyone can hear me and see my screen. If you could confirm it in the chat box, be great. Yeah. So today we have James Harte again, trader and analyst over at LittleFish FX, and he will introduce you to the concept of support and resistance, and you will learn why these areas develop, why they're relevant, and how to identify and trade according to them. LittleFish FX is a trading education company. Their agenda is to democratize the financial markets and to make it accessible to everyone. They do so by providing daily analysis, proprietary indicators, trade alerts, trading courses, and a lot more. 2 of LittleFish FX's courses are available on Tradimo. You can find them in the description underneath this video on YouTube. One of them is the NFP course, and the other one is the top 4 FX trading strategies. These courses, they delve into more detail about some of the concepts covered by this webinar. And if you would like to learn more how they trade at LittleFish FX, I encourage you to go over to learn.tradimo.com and check out these courses, or just simply click below the video in the description box and you get the links to the courses. So back to our current session. It's titled Understanding Support and Resistance. And now, without further delay, I would like to welcome our guest speaker, James Harte. And please, James, begin your presentation.
Thanks a lot for the introduction, Peter, and thanks a lot, everyone, for joining me for this session. So in the last session, we were looking at trend lines and channels and how we can use them to frame the market, help us understand price action, and identify bias and trading opportunities. Now, in this session, we're going to be looking at what is perhaps one of the simplest yet most effective aspects of technical analysis, and that is support and resistance. Now, many people might discard support and resistance as simply drawing lines on a chart and hoping that price bounces or reverses when it hits those lines. And whilst on the face of it, it may indeed seem like that is the case. To think of support and resistance in those terms only is to totally misunderstand what support and resistance actually are and why they are so useful to us. So in this session, we're going to talk about the underlying order flow dynamic that creates support and resistance, how to properly identify these levels, the way you can trade these levels, and finally, we'll look at some tools you can use to help you identify support and resistance. So as ever, if you have any questions during the presentation, please just write them in the chat box and I'll stop periodically to answer them. Okay, so kicking off first of all then, we need to identify what actually is support and resistance. So support and resistance levels, they're levels that we highlight in the market that actually give us some insight into the underlying order flow present in the market. Support levels tell us where there has been demand in the market and where we can anticipate that demand remains, and resistance tells us where there has been supply in the market and where we can anticipate that supply remains. And really, that's all that this boils down to, okay? A game of supply and demand, with price driven by the underlying orders in the market. Support and resistance levels help us identify areas where we can potentially get involved, looking to buy price where there is good demand and looking to sell price where there is good supply. So let's look at an example and talk through in these terms. Okay, so looking at this example then, you can see that we have resistance overhead where there's a buildup of orders to sell, and demand down below, support where there is a buildup of orders to buy. So we can see initially, okay, that price was moving in this really sustained bullish fashion. So we had a really large bullish move to the top side. You can see that we had a series of successive bullish candles with hardly any bearish candles in this series. So really strong demand in the market all the way up until this point here. And then at this point here, look what happened. Price reversed really sharply and did a complete about turn, trading all the way back down almost to the start of that initial bullish move. So from that low, look what then happened, okay? So price sold off all the way down to the start of that move, and then just as sharply as we saw price reverse from that high point, we can see that price did as sharply a reversal from this point here, trading all the way back up to that resistance point. So we know two things now in the market, okay? We know that there is heavy supply at this point, and we know that there is heavy demand at this point, okay? Sellers overwhelmed buyers to take price lower from this area, and buyers overwhelmed sellers to take price higher from this area. So once we go ahead and identify these two key market points, we go ahead and identify our support level rather, and our resistance level by highlighting these bands. And then look what happens each subsequent time that price trades into these zones. So you can see that from this sharp reversal here, price trades all the way back up into that resistance level, touches that resistance level, and then once again we can see that all of that demand that was strong enough to take price up into that resistance zone is once again absorbed and reversed, and price cascades lower from that level. We sell off really sharply, and then once again we make it all the way back down into that support level where we see a further reversal occur. So again, we see all of this supply in the market absorbed and reversed, and demand kicks in stronger, once again taking price back up. We then trade back up, retest that resistance zone, and yet a further time we see that supply demand scale shifting, okay? So demand that is strong enough to take price up into resistance gets overwhelmed and reversed by supply, and then supply takes price all the way back down into that support level. Okay, so essentially when we're able to identify these two key levels, these resistance and support levels in the market, all we're seeing is a rotation between heavy supply at the top end and heavy demand at the bottom end. So buyers are trying to break price to the top side, and sellers are trying to break price to the downside. Now, whenever we identify these clear standout ranges like this, we know that we have a situation that we can potentially exploit. We anticipate that when price trades into the top end of the range, we're going to see a reversal lower because of the heavy supply. And we anticipate that when price trades into the bottom of the range, we're going to see a reversal higher because of demand. And we can look to capitalize on this via a strategy known as fading the range. It's a very simple strategy that we can look to employ in these situations where essentially we look to sell into the top end of the range, banking on that resistance turning price lower, and we look to buy into the bottom of the range as price is turned higher. So hopefully by now you're starting to get a clearer picture of what support and resistance actually are. Okay, they aren't just lines on a chart, and hopefully now you can understand a little more why they can be so useful. Now, one key thing to point out at this stage relates to how we actually identify support and resistance, because you'll notice that the support and resistance levels on my chart are drawn as quite thick rectangles. Okay, so we've actually got bands or areas instead of a specific price level. And this is a really important aspect to understand, because a lot of people, a lot of new traders, when they're first starting to apply support and resistance to the market, they get caught up trying to be overly specific. They're trying to pin price down to a single level, looking to use a single line. So for example, on this chart at the top end, they might draw the resistance level as simply being the very top of this candle, okay? So price made it all the way up to this higher point and then reverse lower. So they might go ahead and just draw in a resistance line there. However, what they're actually failing to understand is the way that price action works and the way that order flow in the market works, because what we actually see at this level isn't a specific point, okay? We see a reversal area. Look what happens when price traded up into that high. So we initially traded all the way up into this high point, and then sellers stepped in to take price sharply lower, and you can see that this candle closed all the way down here. The next candle then traded right back up into the highs of that first candle, where once again we saw sellers step in to reverse price and take it lower. And again, the candle closed down off the highs. That third candle then was the reversal point from which we didn't trade up into that high point, we just turned lower. So we actually know that sellers were heavy in the market, were heavily present in the market rather, from this high point down to this point here, okay? So this is the battle line between bulls and bears. So buyers are trying to drive price higher, sellers drive price down to this level here. So we go ahead and mark the resistance level as being the level between the candle close, the low candle close of that resistance level, and the high point. And then you can see the same thing on the downside, okay? So we've got this really big bearish expansion bar here. Price traded all the way down to this low point here, and then buyers stepped in to sharply reverse price higher, okay? And again, you can see that just as we saw on the top side with that long wick candle, we got the same long wick candle here. And these can be a really fantastic indication of an important support or resistance level, because what this actually shows us is an acute shift in sentiment, okay? So if you think about what actually happened during this candle, sellers were heavily in control, taking price down, carrying on the baton from this initial bearish candle, but then buyers stepped in to sharply bring price back up, and price closed at this point. So instead of going in and simply marking the very low of this candle as being our support region, being our support level rather, we go ahead and mark the low of the candle, but also the close of the candle, because you can see that this is actually the zone where buyers were asserting their dominance in the market and starting to take control. And you can see that these two candles here actually traded back down into that zone. And once again, those long wick candles show that reversal in sentiment, that shift from bearish control to bullish control with buyers stepping in. So it's really important when you're applying your support and resistance that you look at the market and think about what is actually happening and what these specific candlesticks are telling you. And you'll see then that it's far more useful to both your analysis and your trading to look to mark support and resistance as levels or areas instead of just a specific price point. And you can see that this has two benefits really. The first is that it helps you to capture more reversals, okay? Because look what happens at the subsequent tests of these levels. If we had gone ahead and just marked in this resistance level as being the very top of this candle, we would have missed this fantastic reversal here where price just tested that resistance zone. Similarly to the downside here, if we had just gone ahead and marked in that support, that very low as being the support level, then we would have missed this fantastic reversal where once again price just traded in to the level. Now, the other benefit is when you're applying your stops to the market, okay? Because again, this comes from the need from a lot of beginner traders to find this sort of specific precision in the market, which you really don't need in order to find success. And actually learning to be a little bit broader in the levels that you use will actually benefit you more and help you find more success. Because one of the things that I often see with a lot of the new traders that I work with is their stop losses around these support and resistance levels are just too tight. And generally that comes from them simply looking to identify just one specific level instead of a price band. You need to understand the way that price works around these levels and the battle that is taking place between buyers and sellers, and understand that these can be volatile areas, okay? These are flashpoints between buyers and sellers. And this is indicated by these long wicks that we generally see at these areas where we're getting this shift in sentiment. So you need to give price a little bit of room to breathe around these areas to make sure that you aren't caught out simply trying to be too specific. So hopefully from looking at this example now, firstly, you've come to understand just how useful support and resistance can be, okay? They aren't just lines in a chart. They give us a glimpse into the underlying order flow driving price action. And now hopefully you understand a little more about the way in which we should be looking to apply support and resistance, or identify support and resistance rather, as being areas instead of specific levels. Now, there will, of course, be some instances where you can identify a very specific level, but generally, for the most part, with a resistance level, if you keep it to looking to highlight a level between the closes of that resistance level and the very high of the resistance level, and then on the downside, if you look to identify support as being the area from the very low of the region to the candle closes of the region, this will ensure that you get a really nice area at which you can look to identify potential trade setups. So this is obviously a very classic range situation in which price is rotating between resistance at the top end of the range, where we know there is stronger supply, a stronger buildup of orders to sell, and then support at the low end of the region, where we know there is a buildup of orders to buy, which we call demand. Now, one of the most important aspects of support and resistance, and one of the most useful aspects in terms of our own actual trading of these levels, is the changing nature of these levels. So again, going back to that underlying order flow dynamic that creates support and resistance. So where we identify resistance as being a buildup of orders to sell in the market, we know that for price to break through that resistance and break above those orders to sell, demand has to absorb those orders to sell and has to become stronger. So for price to break above, demand has to outweigh supply. And once demand has overtaken supply and price is broken out above that resistance level, we know that sellers at that point are now weaker than buyers. We know that there is more buying in the market than selling at that level. And so we can anticipate that if price trades back down to retest that broken resistance, the demand that was strong enough to take price above that resistance level initially is going to remain strong enough in the market to yield a reaction. So let's take a look at this on the charts then and talk through this illustration in action. Okay, so this is a fantastic scenario to demonstrate perfectly that dynamic which we're talking about, this shifting underlying order flow dynamic. So you can see here, initially we have a really solid support level in the market, okay? You can see price trading down into this region, and each time we do trade into that region, you can see that we're bouncing. So buyers are strong in the market at this point, and each subsequent test of that level is yielding a nice reaction higher. Now again, just to clarify that point, reiterate that point, look at how I've identified this region, okay? So this was our initial support test. We made our initial low here. And again, you can see we got those long wick candles. So I've marked the region as being the very low of that candle up to the close of that candle. And you can see this really is the support region, because at this point here, we get a test of just the initial support level, which was identified as the close of that candle. And here we test deeper down into the bottom of that region. So again, you need to make sure that you're identifying these areas properly, not looking to be too specific. So going back to the example then, price is bouncing along from this support level because we know that there is strong demand. We then trade down into the support level one last time at this region. We stall out initially, just as we did over here, okay? So buyers are still stepping in at this point. However, look what happens at this point here. This is a really important shift in the order flow landscape, because we can see that unlike previously where price bounced up from that support region, price is actually now broken down below that support level. And so we know that for this to happen, for this break to take place, supply now outweighs demand at this level, okay? So sellers are now stronger in the market than buyers at this point. We've taken price down through that support level. And so now we can anticipate that if price trades back up to retest that broken support level, that broken support level is now going to act as resistance, because there is now more supply in the market at that point than there is demand. And you can see that's precisely what happened. Price traded back up, retested that broken support level, and we can see that sellers remain strong enough in the market at that point to turn price lower. So this is a really fantastic example of a situation that you should be monitoring the charts for, okay? Where we get a break and retest of these really clear structural support and resistance levels. These can be a fantastic opportunity for trading. So one of the things that you can look to build in to your trading analysis is looking to identify these retests in line with the overall trend. So where we have a bearish trend and then we see a break of support and a retest, these can be fantastic areas to look to position yourself for a continuation of the trend. And if we look forward on this same chart, so if we go ahead now from this slide to the next one, so this was the area we were looking at initially. That was the support zone, that was the break, and that was the retest. Look how this area continues to be a really important price pivot for the market, okay? So having broken down through that support level initially, we trade back up, retest it, and find resistance. We then trade back up, find resistance a further time, and you can see that we have several tests here when the market is trying to break above that resistance level. But again, sellers are outweighing buyers At this point here, however, you can see that we break out above this resistance level, trade back down, retest it. And again, because we've now broken above that level, we know that supply has been absorbed and that buyers are now stronger in the market than sellers. And so when price retests that broken resistance level from the top side, you can see that we now find that level acts as support. So this highlights just how useful it can be to identify these areas on your charts, because look at the opportunities that you could have found yourself in just had you identified this one particular price band. And you can see that it's really a case of monitoring the charts and updating your analysis and really keeping an eye out for these areas, because once you've identified these really clear areas in the market and then you've identified a break, you will then find that they continue to be valid as price retest these levels until we move into a new phase of price action. So until this high is broken and price starts to take off to the top side, or until this low is broken and price starts to take off to the downside, these areas tend to become very pivotal for price as they continue to oscillate around in a range situation. So this shifting nature of these levels, again, is a really important aspect and one of the most useful in terms of trading. And the thing is, it occurs on all time frames, okay? It occurs on the 5-minute chart and it occurs on the weekly chart. This shifting order flow is what is driving price all the time. And it's what is creating and perpetuating these levels. So obviously here we're looking at the 60-minute chart on the sterling yen, and we've identified how a break of support becomes resistance, and then a break of resistance becomes support. Now, if we take a look at this example, here we have the Aussie yen on a weekly chart looking back over the last decade, and you can see that we have exactly the same dynamic playing out, obviously on a much larger scale. So here initially we identify strong support in the market with price bouncing from this low. We know that buyers are really strong in the market, and again, look at these long wicked candles indicating that really sharp shift in sentiment, okay? So price is trading lower into these areas, and then buyers are stepping in and aggressively driving price back up. So we identify our support zone here. We then identify the break. So at this point, we again know that demand has been overwhelmed and buyers have been out. Demand has been overwhelmed rather, and suppliers are stronger in the market. Price then trades all the way back up, retest that broken support, and again we see it act as resistance because we know now that sellers are stronger in the market than buyers. We can see price makes 2 further tests of that resistance level. Again, sellers are still heavy in the market at this point, and they're capping each subsequent rally into that level. But then at this point here, we get a further shift in the supply demand scale. Price breaks out above that heavy resistance zone, and so we know now that the scale has tipped in favor of buyers. So demand is back in favor. We know that the buying is stronger in the market than selling at this point, and then look what happens each time we trade back down into that support zone. We find that buyers continue to dominate the market and drive price higher until at this point here, again, that demand supply scale is tipped. Sellers are stronger in the market than buyers. Price breaks down below that support level, trades back up, and finds resistance. Okay, so in exactly the same way as we saw this dynamic playing out on the 1-hour charts, we're now looking at this playing out on the weekly charts. It is exactly the same situation with these levels that we identify oscillating between being support, where demand is strong, and the resistance once supply is strong. And obviously the only difference here is that we're looking at a weekly chart, and so these moves, instead of being between 20 and 50 pips, could be anywhere between a couple of hundred and a couple of thousand pips, but the principle behind them is exactly the same. So it really does pay to build your competency in identifying these levels and then looking to build in trade parameters so you can actually use them in your trading. So if you only practice trading these 2 scenarios that we've looked at so far, if you got really good at highlighting these conditions in the market, either these range-bound situations, such as we looked at initially, where you can look to take advantage of fading the range, or looking to identify these really clear structural levels and then identifying a break and a retest. If you really just worked on mastering these 2 setups, okay, so identifying conditions which are favorable for your strategy, looking to build in positive risk reward parameters, then you can be consistently profitable trading these setups. Support and resistance form the cornerstone of the first consistently profitable trading strategies that I've used, and indeed that I still use to this day. And I know many great traders who rely on support and resistance for their trading. Okay, it might seem simple and it might seem basic, but I hate to tell you, there really isn't any magic or rocket science involved in trading. Okay, and to be consistently profitable, it really does work in your favor to keep things simple and to look to focus on building in positive risk reward. And understanding support and resistance and understanding how these levels can be useful to you is really a great use of your time. So I think that one of the best practices that you can look to build into your research is going away from a webinar like this one and really practicing identifying these levels on your charts. And one of the things I always say to the traders that I work with is that each week you should look to pull up your charts from afresh. So get rid of any levels that you've previously drawn, take all the indicators off that you might use, and just look at the market and look how price is moving and look to identify these really key important levels, and then journal down some of these levels and the sort of reactions that you expect or anticipate might occur over the week. And this is a really fantastic exercise to help you build your competency and your confidence, not only in identifying these levels, but then also in trading them, okay? Because an example like this shows you clearly just how well you can use these levels in your trading, okay? You can see the type of reactions that occur and just how important these levels can be. And so looking to monitor these levels week on week and really mark yourself. So mark yourself on your ability to identify these levels and also gauging reactions. And then it's not going to be very long before you're able to build a decent strategy to allow you to be consistently profitable from identifying and using these levels. So with that in mind, what we'll do next is take a look at the live charts, and I'll show you sort of on a rolling basis how I plot support and resistance levels. Let me just grab some water because my throat is quite dry. Okay, so let's pull up. This is a daily chart of the Aussie dollar, okay? So one thing that stands out very clearly at this point is that over the last couple of years, we've been in a really clear bearish trend. And then over the last year and a half, we've sort of bottomed out and found this pretty much range bound scenario. So this is a really good chart to look to use for identifying these support and resistance, because we have two conditions in the market here. We have a trending situation and then we have a range bound situation. So if we go from, we won't go all the way back because obviously the market at this point was in quite a free fall, but starting from around this point here where we started to get some interesting levels, okay? So looking at the start of 2015, whenever we're in a bearish trend like this, the simple way to identify the key support and resistance levels in the market are to identify the low points from which price reverses higher, and then to identify the high points from which that reaction or correction exhausts and the bearish trend resumes. So looking at this chart initially, then we can see that price stalled out to the downside here. So we were selling off, we then stalled out here and reversed higher. And so we go ahead and mark in our low and marking our close, and this gives us our support region. And then to the top side, you can see that the correction stalled out at this point here where we had the very high, and then again we had the close. So sellers were in, buyers were in control, sellers stepped in here, drove price down. So we marked from the high point to the close, and on the downside, the close to the low point to the close rather. So we've got our support, we've got our resistance, and immediately you can see in real time, in real example rather, just how well these levels work. So price breaks down through that initial support region, trades down to forge new lows. So we go ahead and draw in our new support levels. So we can see that initially we might have been looking at this region here. However, price failed to return to retest that broken support level, actually turned and broke down through this initial support level. And then you can see that we found a much greater value area at this point here. So price was much more interested in sticking around this region than it was at that initial region. So we go ahead and mark this out as our new support, and then look what happens from this area. So price is bouncing around at these lows. We know that buyers are strong at this point because each test of this level is yielding a decent reversal higher. And then price trades all the way back up to retest that broken support level. And so just like I was talking about, identifying a break and retest of these levels in line with the dominant trend as being a great area to look to identify, look to establish a trade. So we can see here that taking a short from this retest of these broken lows in line with this bearish trend would have been a nice with trend opportunity. So you can see initially we got a nice sell-off here. However, price didn't resolve firmly to the downside. We traded back up, and you can see that we retested this region a further 2 times. We actually broke just above it here before price traded lower, traded back down into that support level, which is where price was stalled for around a month or 2. Before then, price broke down below that support level and traded lower. So the next region from which we saw a decent reaction, which we would have been looking to identify on the charts, is this region here, okay? So price breaks down below this support, and this is a really important support level because look how long it continued in the market, okay? We had 1, 2, 3, 4, 5, 6, 7, 8. So 8 touches over a period of roughly 5 months there. So this was a really solid, important support level. We broke down through that level, traded into this low point, and then this is where we got the first reaction higher. So again, we go in and mark our support region as being the very low to the close. So this gives us this region here. And then our resistance level to the top side, again, is the high point to the close. So looking at the support level first, you can see price breaks down through that support level, trades right down to forge a new low, trades back up, retests that broken support, and once again we see a really great example of the situation I'm talking about, where we can look to identify a retest of these broken structural levels in line with the dominant trend as being a great area to look to test the market. So you can see that we retested that broken support. Sellers stepped back in again, okay? So we know that sellers are strong in the market to have broken down through that area of demand. Price trades back up, retest that broken support. Sellers are strong and they take price down. We actually get a 300 pip move lower. However, we fail to break down through that new low, okay? So now we go ahead and mark in our support region as being the low here to these lows. So this gives us our broad support region here. And from this point, we can see that price trades back up and we actually blow through that initial resistance level, okay? So we made a low, we retested the broken support, we didn't make a new low, okay? We stalled here, made a double bottom, traded up, broke out above that resistance level, but then reversed and traded back beneath it, okay? So from this point here, we can go ahead and mark a new resistance level. So just to save charts from looking too confusing at this stage for anyone who's just joining, or for those of you who are following along indeed and finding this a little complicated, remember this will be recorded, so you will have a chance to go back through this session at a later date and work your way through these levels. So once we've broken out above this resistance level, you can see that we form a new high here. We sell down, we fail to break through that support level, so that's still valid in the market. But then look what happens here, okay? You can see that we identify a really important region in the market. So this high turns into a double top when it's tested at this point here and price sells off. And again, you can see that we make our resistance zone the high point to the close. So we get this level here. And so now you can see that we actually have a really important resistance level holding just beneath another important resistance level, okay? And the thing is, it sometimes is like this in the market, okay? There are going to be areas where price is moving in a really straightforward fashion, such as we have here, oscillating between support, resistance, support, resistance, support, support, resistance, support, resistance. Then there are going to be times that are a little more messy. And when we start to move into a range-bound scenario, such as we've got here, we can start to get overlapping layers of support and resistance. And so the key thing that I always advise when you're learning to apply these levels is just stick to the levels that jump out at you, okay? Just stick to identifying the levels that are so clear that you can't miss them, okay? Because these are the levels, especially as new traders, that you want to focus on and you want to include in your analysis and your trading, okay? And so where we were initially looking at this region as being the resistance level, okay? So we had our reaction higher, and this was the top of that correction before we sold off. So this was the level we were initially looking at as resistance. But you can see here quite clearly that this is a very important level for the market. We stalled out here twice at this precise level at the top point, and then back to this precise level with the close. So this is a very important region for the markets. So you need to go ahead and mark these levels into your charts. Let me just stop here to check a question at this point. Christoph asks, what do you do if price never comes back? It never comes back for me. Well, Christoph, okay, this can be an issue. One thing I would suggest is that if you're marking support and resistance levels and price never comes back, then you're probably in a very heavily trending market, okay? So we looked initially at the price action in the Aussie dollar over this period. So, for example, we might have marked in a support level up here as being the support level. Price breaks down through it, and then you can see, of course, it never comes back up, okay? So this is a dilemma, okay? Support and resistance in trending markets. Generally, if you get a retest of broken support in a heavily trending bearish market, it's more likely to be on the lower time frames. And if you're waiting for a proper retest of broken support, you can see that the first proper retest of broken support that we get in this market is at this region here, okay? So we break down through this support level, trade back up. We get an initial retest here, but then our first proper retest is at this point. So from breaking this support level in 2014, we don't get a proper retest of broken support until 2015. So this can be frustrating. However, the thing that I always say to traders, because this can be a common problem or a common concern, is that there are a wide range of markets, okay? So what you need to do, first of all, is make sure you're identifying the correct levels. And then if you find yourself in a heavily trending market where you're getting these really sharp parabolic moves, you just need to be looking elsewhere, because I promise you, there are always going to be situations that you can trade, okay? Markets are either trending or ranging. When one market is trending, another is ranging. When one market is ranging, another is trending. So there are always going to be ample opportunity for you to identify these support and resistance levels, but more importantly, for you to trade them. So yeah, it can be frustrating in market conditions where price is simply continuing to push in one direction. But the other thing to understand is that you always do get these regions, okay? You never just get a straight sell-off. Market is always consolidating before expanding. And so one way in which you can look to use your support and resistance in a market which you feel is heavily trending is looking to trade breakouts instead of retests, okay? So for example, once you've identified this support level here, you can look to sell as price breaks below it, anticipating that the bearish trend is going to continue. And it's the same at this point here, okay? Price breaks down through this heavy support zone and we continue to sell off. So that is one way which you can look to modify your use of support and resistance. And obviously the opposite would be true for a bullish market. If price was breaking out to the top side, you'd look to identify regions where price consolidates before then looking to trade a breakout as price trades beyond the highs of that level. So these are the ways in which you can look to modify your strategy, or as I say, you can simply look at other charts and find situations which are more favorable for your trading methodology. It all depends on how you're looking to use these levels. But yes, generally, where we're identifying retests of broken support and resistance, they are less frequent in trending markets. And then you can see once we move into a range bound situation, they do become more common. So I hope that clears up your question. And for all you in the session, please, if you have any other questions, do just type them in, and I'll stop as we go along to answer them. Okay, so going back to the current region. Okay, yeah. So going back to the current region, so we identified this really important level in the market. So we can see that this is our resistance level. Price trades down from this resistance level and actually breaks through our support zone. So we get an initial test of support here where we get a nice 100 pip bounce, but then price does in fact trade lower. Sellers break down below this support But then what we actually get is a fake out, okay, because we don't see a continuation of the bearish trend. We actually see some capitulation to the downside and exhaustion in bearish sentiment. And from this point, price reverses higher. And you can see we trade up to retest that initial resistance zone again. And so again, this here is reaffirming what I was saying about these levels becoming pivotal levels for market, okay? So this level, which we initially identified as support, then acted as resistance. You can see here it acted as support, here it acted as resistance. We had support here and then further resistance here. So looking to leave these levels on your charts is a really great way to help further your understanding of how price reacts around these levels, okay? Because just like Christoph was saying, price doesn't always come back to these levels. In heavily trending markets, price doesn't come back to these levels very often. But in range-bound markets like this, price loves to oscillate around these levels, and it can really flag up some brilliant opportunities for trading. So we break out above our resistance level here, and I apologize for anyone who's just tuning in if the charts look a little messy, but I promise you, if you go back and watch the recording, you'll see exactly how we came to identify each of these levels and why they're important. So price breaks out above our resistance level, we trade up, and look what happens here. You can see that we retest those previous broken lows. So we had that big support level in the market. Price broke down through that level. We traded back up, retested that broken support, which now turns to resistance because we know that sellers are stronger, and we can see that price initially trades lower. We then retest that broken resistance level here, which turns to support, and then you can see that we get a little bit of a messy period where price is battling with resistance at this level. And remember what I was saying at the start about these levels being volatile sometimes because they're flashpoints between buyers and sellers. So what we're actually seeing at this point is a flashpoint between the short-term trend, which is bullish, and the long-term trend, which is bearish. So these are really important areas which can be particularly volatile. And as you can see, what we're seeing here is a battle between buyers and sellers. Buyers are driving price higher, sellers are driving price back down, until at this point here, you can see we get an exhaustion of that short-term bullish trend and price sells off. So let's zoom back in on this area. And look, you can see that the region from which that exhaustion point came and we returned lower was actually a really nice resistance level, okay? So we traded up, we had the high point here, and then we had the close here. So remember, when we're identifying these levels, we're always looking to identify two price points. So for resistance, it's the high of the region to the close, and for support, it's the low of the region to the close. So price traded up, retested that previous swing high. So we got this resistance level, and then we sold off and traded back down. And so right now, if we're looking at the Australian dollar, we can see standing out very clearly that we're simply caught in a range-bound situation between this previous resistance turned to support and this previous support turned to resistance. So if I actually go ahead and clear off those lines. So again, you've got this in the recording, so you can go ahead and watch the recording, but just to make this a little clearer at this point. So we've got our resistance level here, and then we've got our support level here. So you can see that currently price is basically range bound between these two areas. So we found support here, we found support, we found resistance here. So really for now, the Aussie isn't a particularly great chart to look to use for these support and resistance trades because we're simply caught in this zone. So we aren't getting any sort of directional resolution. But hopefully you can really understand now the process that you need to be following when you're identifying these support and resistance levels, and the way that you need to update your charts as we go along to identify the new levels which are important. And so looking at the Aussie dollar now, the next really important levels in terms of marking a directional move are going to be a break of this resistance region here, okay, these previous highs, and then a downside break initially of this support region, okay, so these lows here, and then obviously we have the ultimate lows down here. So these are the levels that we're looking at in the Australian dollar. So I hope that's been really useful in terms of helping you understand how I identify these levels. And as I say, spend some time looking back through the recording and really making sure that you understand exactly why I was picking the levels that I'm picking. And then another thing to really point out here just quickly is that obviously at this stage, we're just looking at the Australian dollar on the daily chart. So I picked out the levels which really stand out on the daily chart, but obviously there are some other levels, some shorter term levels which stand out also, which I haven't included. And some of you might be thinking, I wonder why he hasn't drawn those levels. And the reason are that they are typically shorter time frame levels, so lower time frame levels. Okay, so what I've drawn out here are the levels which really stand out on the daily charts, but obviously there are some other levels, such as this level here, for example, where we had a low, and a retest, which would be important levels on the lower time frames. But what I'm just showing you is the process that I use for identifying these levels, which is time frame agnostic. Okay, so whichever time frame you're on, whether it's the 5-minute chart or the quarterly chart, this is the process that you follow. So what I'm not showing you is every single level I'm looking at on the Aussie dollar chart at the moment. I'm just showing you the process that I use to identify these levels, which you then apply yourself on whichever time frame it is that you're using. So I hope that's been a really useful segment of the of the session. And then returning to the slideshow then for the last part, we've talked about how we can use support and resistance in this range bound situation to fade, where we sell as price moves into resistance and buy as price moves into support. We then talked about how we can look to use the shifting order flow dynamics, so the shifting nature of these levels in terms of trading a retest of broken support as resistance and trading a retest of broken resistance as support. And then finally, we'll just think about a couple of different tools that you can use to identify support and resistance in the market. Okay, so obviously I just showed you how I identify support and resistance in the market in terms of naked price action. So no indicators, I'm simply looking at a bare price chart and identifying the key levels that stand out. But there are also some tools that we can look to use to identify support and resistance. So so if we look here, so this slide, one thing to point out, and this is a really important idea or aspect of support and resistance, okay? And this is one thing that I often see with a lot of new traders that get sucked into, okay, is that they look at a really mature level in the market as being a level which they should look to continue to use. So when we identify a support level like this that has several touches, what I often hear from a lot of new traders is that they flag this level up and they say, hey, look, I found this really great level in the market. I'm going to look to buy this week. What do you think? And then I pull up my chart and I look at the level and I see a level which, although this is a beautifully drawn illustration, will obviously be clear on the price chart. So we see a level where we have a lot of tests of a support zone. And so this indicates strong demand at the level. And then essentially the trader is looking to buy a subsequent test of that level. However, then what generally happens is price breaks down through that level and sells off, and they're quite shocked. So the reason for this is because the trader's understanding of the underlying order flow dynamic at this level is wrong, okay? So they think that because there are several touches of a support level, that the support level is actually getting stronger and that they can look to continue to use it as an area to buy. However, this is actually incorrect and the opposite is true, okay? The more times that a level is tested, the weaker it's getting because the orders at that level are being eroded, okay? So we have orders to buy in the market initially, so which create our demand, which create our support zone. But the more times that price tests this level, the more these orders are eroded, okay? And so we see some newer buyers stepping in initially to drive price back up. So we've got a level of initial orders which become eroded, and then we get further buyers stepping in. But then each time price trades up and fails to break out to the top side and returns to the downside, these orders are becoming eroded and less buyers are present in the market until ultimately price breaks down through that level. And if we quickly just go back to the chart, a really great example of this would be this zone here that we had in the Aussie dollar last year, okay? So you can see this was a zone where we had 8 touches of this support level. So each time price traded into this level, buyers were stepping in. But then ultimately, we didn't see price break out to the top side. We saw price fail and break to the downside. Because although this level was strong, although there was strong demand in the market, keeping this level in play, each time price is trading into that level, more of these orders are being eroded, and each subsequent test sees less and less demand in the market until finally price breaks down. So this is really key to point out, okay? Where we get initial short-term ranges build up, such as a low and a resistance, okay, we can look to play the initial range, and this can be a fantastic way to trade. But once we identify these really mature levels where price is testing these levels several times, these are the ones which you'd look to stay away from. And actually, I was talking with Christoph earlier about breakout trading. These can be the levels which can be the most rewarding to trade from a breakout perspective, okay? Because let's think about what we're actually seeing here. We've got price in a long-term bearish trend. We then identify this really clear support level where price is building up against this level, and think about it as a tide breaking through a flood barrier, perhaps, okay? All of the pressure is to the downside, and although we've got this region of support where buyers are stepping in, ultimately we see that level fail and price just cascades, okay? The flood breaks through the flood barrier and continues on. So where we identify these really strong levels where price continues to test them, we know that the market is trying to push to the other side, okay? The market is trying to get beyond that level, and these can be particularly great levels to look to trade for breakouts. So that is one thing that I really want you to think about, is that when you're identifying these support and resistance levels, okay, the younger the range, so the shorter the range, the better it is for trading, okay? If you're looking to play the second and third touch of a level in a range, that can be a really great trade where you've initially got a double top or a triple top, for example. But once you start to get these areas build up where you've got 4, 5, and 6 or more touches, and instead of looking to fade that level, so instead of looking to buy support or sell resistance, you should really start to be thinking about a breakout, and you should be looking to sell as price breaks through support or buy as price trades through resistance. So I hope that that has been a really useful snippet for you there, actually, because again, as I say, this is one of the things that I have a lot with a lot of the new traders that I work with, is that they're looking each week to identify these levels, and I often get shown a level like this, which is a really mature level with several touches, and the trader is a little bit confused when, instead of telling them or suggesting that maybe they try and fade the level, I'm suggesting that they wait for a breakout to occur. So that's the reason why, okay? Because again, the underlying order flow dynamic that creates and perpetuates these levels is shifting. It isn't stagnant. A support level doesn't just continue to be a support level. And as traders and analysts, we have to be thinking about what is going on with the market, what is happening with the orders when we're seeing the price action that we're seeing. And when we see a build-up like this with a level that's being tested several times, in my mind, that suggests that the market is trying to get beyond it and we can anticipate a breakout. So going back then to the final part of the webinar, if I just pull up the slides, and we're talking about some of the tools which we can use for identifying support and resistance, okay? And really there are three main ones. We have pivot points, moving averages, and Fibonacci levels. Now, we're not going to look at all of them in this session because we're actually running short on time. But for those of you who are interested in looking at all of these, you can definitely head to the website, www.littlefishfx.com, and check out a lot of the great material that we've got on the website there that covers these areas. And for any of you who are interested in any further research, we have the Forex Master Course, which goes into great detail about these aspects and more. But for the purposes of this session, we'll just focus on the Fibonacci Fibonacci levels, okay? Fibonacci can be a fantastic tool for identifying support and resistance in the market, okay? So the use of Fibonacci in the market relates to the Fibonacci number sequence, which is it's a number sequence which is found throughout nature, okay, from honeycombs and flowers to seashells and star constellations, okay? And it's really interesting stuff. It's all to do with natural geometrical formations. And we'll actually come on to look at Fibonacci analysis in greater detail in, I think, the next session which we do, which will be in a couple of weeks from now. But we'll just quickly identify in this session how Fibonacci can be useful in terms of identifying support and resistance, okay? So what we're seeing in this example here is the Fibonacci retracement tool. The purposes of the Fibonacci retracement tool is to help us identify levels within a price swing which will act as reversal points. So where we have a bearish price swing like this, we then look to identify Fibonacci levels which will act as resistance and turn price lower. So simply, all we do is pull up a naked price chart and pull up our Fibonacci tool, okay? And for those of you who are unaware, if I go to this point, let me just clear those lines out. If I go to this chart, okay, this is an MT4 chart, which I see a lot of you will be using. Your Fibonacci tool is generally there, or it's in your insert section here, Fibonacci. And then you get your retracement tool, and for a bearish swing, you apply it from the high to the low, and that gives you your levels. Or for a bullish swing, you apply it from the low to the high, and again, that gives you your levels. Okay, and so you can see here, actually, instead of going back to the slides, we'll just do it here because I think this is probably more worthwhile. So looking initially at this then, you can see just how well these levels are respected, okay? So we've got our initial bearish move, price is bouncing and starts to turn higher. So then we're starting to look at levels which might act as resistance. We go ahead and draw in our Fibonacci retracement tool and look how well these levels act as support and resistance, okay? We'll actually drop down to the H4 chart to see that a little bit clearer. So you can see that we have really great resistance at this level here, the 50% retracement. We trade down and find really great support at the retest of the broken 23.6. You can see that we have great resistance here at the retest of the 38.2. We get further resistance at this 50% retracement level. We then trade beyond that level, break out, and find resistance at the 61.8 level. Obviously, we trade a little bit beyond it, but if we go back to that daily chart, you can see by the candle closes that we traded up, touched that level, traded slightly beyond it, got some overshot, but then closed back below it. So we have clear resistance at that level. We then sold off from that level, traded down, and found support at that broken 23.6. So we were looking before at how we can identify support and resistance on naked charts simply using our own eyes. But here, look how useful a tool Fibonacci retracements can be in helping us to identify potential support and resistance in the market, because look how well prices respected these levels, okay? So Fibonacci is a really fantastic tool that you can look to use in terms of identifying support and resistance in the market. And one of the really fantastic ways which you can look to use Fibonacci in terms of identifying support and resistance is identifying confluence between Fibonacci levels and key structural levels. So if we're looking at this chart here, one thing that stands out about this particular level is that not only is it the 50% retracement, but it's also really good resistance because we have this broken support in the market. It'll be clearer on the lower time frame. Okay, so look, we have this really clear support level in the market, okay? Price was bouncing at this level. We know that buyers are strong. Break down through it here. And so we anticipate that as price trades up and retests these broken lows, it's going to act as resistance. And not only do we have resistance level there, but we also have the 50% retracement, okay? So this is a really fantastic level in which you can look to engage the market because you have confluence between a Fibonacci level and you have confluence between a Fibonacci level and the structural support and resistance level, okay? So hopefully just that short section shows you just how useful Fibonacci levels can be, okay? Whether you're just looking to trade Fibonacci levels themselves, which you can see are powerful enough with all of the reactions that we're getting, or you're looking to combine them with traditional support, structural support and resistance. Okay, so thanks a lot for joining today's session, guys. I hope that you found that really useful. I actually really enjoyed that session. It was great to go over support and resistance. As I say, support and resistance form the cornerstone of the first consistently profitable trading strategies that I was using, and indeed that I still use today. So it's always great to go through the basics of support and resistance and really hone those levels again. And as I say, a fantastic exercise that you can look to use is going through your charts on a weekly and daily basis, highlighting the levels which you think will be the key levels for the coming sessions, and then noting down what happens at these levels. And I promise you that once you do this for a while, whether it's a couple of days or a couple of weeks, depending on how long it takes you to get good at it, you'll then start to get some really great ideas about the way that you can trade these levels, whether it's trading breakouts of key levels or retests of key levels. But again, support and resistance can be a really fantastic way to trade the market. So I really appreciate all of you joining in today, and thanks for your contributions. And I look forward to catching up with you all next time when we'll be looking at using Fibonacci. So we'll be looking in greater detail at actually using Fibonacci. Okay, so thanks a lot, everyone. Take care, and I'll catch you all next time.
Thank you, James. I hope everyone enjoyed the webinar. I definitely found it educational. And if you like the concepts introduced in this webinar, I would advise you to head over to learn.tradimo.com and check out LittleFish FX's NFP and Top 4 Forex Strategies course. The links to the courses are just below this video, so check them out. And the awesome thing is, if you take out the Top 4 Strategies course, you get a complimentary 30-day access to their live analysis and signals, which have produced over 3,000 pips in the last 7 months. So it's definitely worth checking out. And as James said, LittleFish FX are offering 20% discount on indicators, analysis, and signals. So head over to littlefishfx.com and use the coupon code LFXTradimo. All the details are again in the description. And thank you again for coming. And the next webinar will be announced, so just watch out for announcements. Thanks very much. Bye-bye.